Welcome to Talk Tickers. Today, we are breaking down the latest earnings call from Lockheed Martin. And trust me, there's a really surprising story here. And the market's reaction, well, that speaks volumes.
So, on earnings day, the market sent a crystal clear signal. The stock shot up, closing over 4% higher on some pretty heavy volume. That tells you right away that investors heard something they really liked, something that went way beyond just the headline numbers.
And yeah, this is the big question, isn't it? This whole rally happened, even though they actually missed on earnings per share. So what in the world did Wall Street see that made them want to buy the stock so aggressively?
All right, let's dive in. We're going to look at that surprising reaction, then get to the real reason for the pop, the future guidance. After that, we'll dig into this massive multi-billion-dollar ramp-up they're planning, talk about the risks, and then we'll wrap up with our official rating and even a trade idea.
Okay, first things first. Let's just lay out the numbers for the fourth quarter so we're all on the same page.
So looking at the surface, the results were kind of mixed. Adjusted EPS, it missed by just a single penny. A penny! But then you look at revenue, and that was a completely different story. A huge beat of $460 million, bringing the total to over $20 billion. That's a solid 9% growth year over year.
The market, well, it clearly just looked right past that tiny EPS miss. And this right here, this is the reason why. It's all about what's coming next. Okay, so this is the crucial part, the forward guidance. For 2026, management is guiding sales to almost $79 billion. That absolutely crushes what the street was expecting. We're talking by over $4 billion. EPS guidance was pretty much in line, but then look at free cash flow, a huge beat there too. This is management basically telling the world they have incredible conviction in their business.
And let me tell you, this bullish guidance, it is not just talk. No way. It is backed by a record-high backlog and a massive strategic plan that is going to completely reframe how we think about this company's growth for years to come.
Let's just start with the foundation here. They ended the year with a backlog of $179 billion, a record high. That is just an enormous amount of future revenue that's already booked, which takes a ton of risk off the table. Now this is what really gets exciting. The sheer scale of what they're planning is just, wow. They signed a landmark 7-year deal to massively expand their missile defense production. We're talking about quadrupling THAAD interceptor capacity and then tripling PAC-3 capacity. This whole thing is backed by a multi-billion-dollar investment. This isn't just a small step up, folks. This is a generational ramp up. And you could just hear it in the CEO's voice on the call. The language was clear, it was confident. He kept coming back to this theme over and over, meeting unprecedented demand by making significant investments. They are going all in.
But of course, a plan this big, this ambitious, it doesn't happen without some major challenges. So what could actually go wrong here?
All right, so when you listen to the Q&A on the call, a few key risks pop up. First, there's just plain old execution risk. Scaling this fast is incredibly hard, and delays could be expensive. Then you've got margin pressure. Getting these giant new production lines up and running could mean lower profits at the start. Third, the supply chain. Finding all the parts and, more importantly, the skilled people to do the work is a huge undertaking. And finally, there's always scrutiny on these big fixed-price contracts, where if things cost more than planned, it comes right out of Lockheed's pocket.
So you have this incredibly powerful growth story on one hand, and these very real risks on the other. So after weighing it all, here's where we land. Here's our take.
We're initiating coverage with an outperform rating. Now for us, what that means is we expect Lockheed Martin stock to beat its competitors and probably the broader market over the next year. And we think that's because there are positive catalysts here that just aren't fully baked into the stock price yet.
Our thesis here is actually pretty simple, and it's basically what the market was telling us on earnings day. Investors are looking right through the short-term noise, like a 1-cent earnings miss, and they're focusing on this durable, multi-year growth story. This whole thing is being driven by what you could call a defense modernization supercycle, and Lockheed is putting itself right in the driver's seat.
Okay, for our last section, let's talk about an actual trade idea. This is our outrageous but plausible take on how to play this.
So, if you believe in this thesis, one way to play it is with a long-dated bull call spread, maybe looking out to January of 2028. It's an option strategy that lets you bet on the upside from this huge ramp-up, but it also defines your risk right from the start.
Basically, it helps you capture that potential upside as they prove they can execute, while capping your potential loss. And what you'll be watching for are those future earnings reports, looking for confirmation that they are hitting their production targets.
And as always, this is not financial advice.